All right, so Carl Ichan has been in the news a lot today. Number one, he recommended, or he stated that he had shares in Apple, saying that is a no-brainer. And the headline of this is off of Barron's, or one of the blogs on Barron's, and it says, Icahn sees problem of our economy in buyback fight. And if you look at starting over here, reiterated his view that the company is a no-brainer, but it is also doing a disservice to investors. He said he plans to continue to fight, but that he would be happy if the company doesn't follow his instructions, because it would be good for himself and other large shareholders who can continue to buy the stock. Regarding Apple's insistence, it has people advising it, and they have not advised such a buyback. I think to have these bankers tell them not to buy their stock, it's ridiculous. The Apple board, sure, they're seasoned people, but there's no one on there who's a financial expert. One of the most troubles in this country is these bankers have their own agenda. They shouldn't be micromanaging the use of the company's money. I think I have one hell of a good record at telling you how to manage your money, but I'm making a more universal point. This is one of the troubles of our economy, and Apple is a quintessential example. Now, hold up. He said that one of our economy's problem is that Apple is not buying back our shares. This is the number one, the problem with these 1% guys in New York. Okay, they're great at investing. It's good that they started from the bottom up, usually a lot of them, when they started their own hedge funds and all that stuff. But the number one problem that I have with these traders, although they're successful, right? Don't get me wrong, is that they don't realize that what they're doing is only good for the 1%. And you know me, I'm all for the free market. But when you have a central bank that continues to manage and distort the economy, and when you have these 1% guys saying that, guess what? You need to buy your stock in order to make the economy grow, right? This is probably the most ridiculous thing I've ever heard. And I'm going to show you, number one, why in the long run it's not good to buy back stock. That does not create growth for the middle class. It creates growth, or it makes Carl Icahn much richer. It helps those shareholders. But does it help the average Joe? No, it does not. I'll show you why. Okay, this is off the University of Chicago Graduate School, and this is an interesting article that I looked up, and it is what drives companies to repurchase their stock. And let's go all the way to the bottom of this article, and if you look at, what is it called? I lost my train of thought. If you look at over here, it's called For Consideration, and we could start over here. While they're not opposed to stock repurchasing, Benz and Wong's, one of the authors of this article, cautioned that logic behind these repurchase decisions is not especially sound. Investors should be aware of how much managers are repurchasing to manage earnings per share, says Benz. As a manager, I would be aware that it's a fool's game. You are not really creating value, but a lot of managers behave like they are. The stock market may seem to reward these repurchase decisions with an increased stock price, but that should not be a reason for buying back stock if it has only a short-term effect. Benz note that increasing a firm's stock price through repurchases is very different from true value-enhancing strategies such as finding new customers for the firm. In addressing the larger issue of corporate governance, Wong notes, the message for the board of directors is to keep its eyes open as to why managers want to buy back shares. Make sure the managers are not wasting time trying to buy back shares to manage earnings per share. So, long story short, when a company buys back their share, they're not taking the cash that they have and investing in property, plant, or equipment. They're not using it for capital expenditures or capex. They're using it just to boost stock price, and it has no net effect in the long term. Sure, it could raise prices way higher than where they are, but the problem is when you have a boom bust cycle as it is, what's going to happen towards the end of the cycle is what happens is revenue. If you miss on revenues, what happens is since you bought back all these shares, you have less shares outstanding. And if you miss, then guess what? The stock's going to come hammering down. This is what happened in 2007, and in my opinion, This is slowly but steadily happening now. Especially look at some of these retail stocks that have underperformed this past quarter. If you look at Coach as of today, J.C. Penney, I don't think has been doing well. If you look at a few others, Sears, Best Buy, even though that's not technically retail, more technology oriented, but whatever. At the same time, repurchasing stocks does not create value, but these fat cat guys out of New York, such as Carl Ichan, say that they create growth. Yeah, for the 1% as you guys. And this is the problem actually with central banking. I'm going to get a little more into this. And then I see this tweet by Carl Icahn. I remember this. This is September 24, 2013. And he says, "Our country owes Bernanke a great deal for pulling us out of the mess several of the large investments got us into in 2008. Really? So he's saying that we should thank Ben Bernanke for getting us out of this mess to save these fat cats on Wall Street and these hedge fund managers who probably would have lost a lot of their wealth. And that should have happened because the malinvestment should be liquidated, but it was not. And then I know some people are going to say that, hey, you would have suffered. Well, people went through the depression and people still made it. And unfortunately, the government tried all these Keynesian policies which made the depression much, much worse until you had World War II and you just blew the pieces out of the whole world and we just manufactured our way out of it. But if you look at this, he's saying that Bernanke should be praised for what he did. Well, there's no such thing as a free lunch. That's a fact, regardless of whether you agree with what Bernanke did or did not. And because of that, well, there's misallocation of capital throughout the economy. I'm going to show you one example how Ben Bernanke's policies have actually screwed over the youth. I'm going to show you right now. Okay, this is on the Federal Reserve website. Press Control and plus at the same time to zoom in. This is L.105 federal government, and this shows at the top the financial assets of the U.S. government. And over here, one of them is consumer credit, number 10, and it has a footnote. I'm going to read you that footnote, what it corresponds to. And you could see over here, this is $713.5 billion in consumer credit. And if you look at what this consumer credit is, it corresponds to the first footnote. Let's read what the first footnote is. It says, includes loans originated by the Department of Education under the Federal Direct Loan Program, as well as the Federal Family Education Loan Program loans that the government purchased from depository institutions and finance companies. And we could look at the graph that I created. This is from 2001. I'm just going to show you. And we could see how much loans that the U.S. government has increased since 2009, basically. And this is the credit, or this is what's on the balance sheet of the U.S. government. Okay, now we're looking at this Excel spreadsheet that I created. And this shows from 2001 the total loans of consumer credit on the books of the U.S. government. You could see how constant it was up until 2009. Once again, hit Control and plus at the same time to zoom in. So I was hovering around 115 billion, right? And look at how this has gone in a straight line. It's like 724 billion, right? So you can see a huge increase in the consumer credit when it comes to student loans. That's on the balance sheet of the U.S. government. So get this straight. The Federal Reserve has printed all this monopoly money. And because of printing this monopoly money, it has gone into a few sectors. It has gone to government borrowing, and primarily it has gone to the student loan market, right? And it's screwing over young people who are taking out loans to go to college. And sure, the government doesn't get all the fault for this, in my opinion. It's the students who actually do take out the loans. But the problem is that if it weren't for the government, these students wouldn't be dumb enough to take all these, not dumb enough, they wouldn't be able to take out all these loans. And they wouldn't be in so much debt. And that's the problem. So let's just do the quick math. So 724 minus 115 billion. This is like an increase since 2009-ish. Okay. And so it's like 529%. So 530% increase, right? on the balance sheet, and it's for the past how many years? Like close to 5 years now. So it's a 106% increase in the amount of assets that the U.S. government has when it comes to loans, right? Consumer credit handed out by the Department of Education. So when you see guys like Carl Icahn saying that, thank God Ben Bernanke saved us, well, it comes to the expense of screwing over actually the younger generation. That's a cold hard fact. So while Carl Icahn may be living in his posh house in Manhattan or wherever he lives, at the same time, someone gets screwed over. Actually, more people get screwed over because of that. So that's something to note. So yes, we do see the stock market go up. We have seen portfolios go up. But who does it hurt actually? It comes at the expense of these individuals getting these loans. And then you could say that, yes, you're debasing your currency, and as a result, these artificially low interest rates, banks aren't lending, and because of that, guess what? Firms are sitting on a bunch of cash. And then Carl Icahn saying that it's companies like Apple that are the problem. No, it's actually the Fed and these one percenters who don't know what's going on. Anyways, thanks for listening to me, guys. But, oh yeah, last point though. Okay, yes, we are in this environment. You see me complaining in this video. But at the same time, since we're living in this environment, we should take advantage of it. That's the thing that I wouldn't have talked about a few years ago. I would have complained the same way, but the only difference is I'm out there trading in the market. And it's actually fun trading from time to time. So that's something to note, guys, and I'll talk to you later. Bye.